welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. Well, it's Friday. As of yesterday, we did see that the markets, despite some initial volatility, did manage to end above 23,200 on the benchmark index Nifty. This was largely led by the sharp move on the IT names, especially the mid-cap IT names like Persistent Systems, Coforge, Birlasoft, Zensar Tech, Emphasis, and many of them also hit record high levels. And these erstwhile mid-cap IT favorites came back in full flavor, definitely pulling up the Nifty IT index and therefore the Nifty as well. The broader markets also outperformed yesterday. After 2 days of massive sell-off, we actually saw nearly 2% move on the mid-cap index, and the small caps also pushed up higher by over 1% as well. Well, as far as the cues for today are concerned, remember that the stocks in Asia Pacific region have advanced early this morning, tracking overnight rally on Wall Street that pushed many indices to record highs and stocks as well. Also, all eyes will be on Bank of Japan, which is expected to widely raise the interest rates today. As far as the US is concerned, the S&P 500, Dow Jones, that rose by 0.5 and 0.9% respectively. Nasdaq climbed about 0.2% in trade. Back nearer home, you saw the Nikkei trading about 0.5% higher in the early morning trading session. The Australian index was up by about 26 points, or just 0.3% odd or so. And we've also seen that the future contracts in China and Hong Kong also pointed out to gains. GIFT Nifty is absolutely looking at a positive, flat with a positive bias at 23,316 as of now. Of course, the markets will be reacting to key earnings. Dr. Reddy's, Ultratech Cement, and many other such important names will be reacting to their numbers. What will also be important to track is how Donald Trump's virtual address at the World Economic Forum at Davos will now start to impact, especially two key parameters on the oil prices, where he believes the OPEC and other nations should look at reducing the prices. Already, WTI crude is somewhere around $74 a barrel, and there is an expectation it could fall back to about $70 a barrel now, because they're going to be increasing production, and he's looking at asking everyone to, all the key stakeholders, to look at reducing the prices. On interest rates, he did say that interest rates should drop immediately, and it should be a case worldwide as well. So that will be important to track. Flows, again, the foreign investors were net sellers. 5,400 odd crore rupees of sell-off came in from their end, even though the DIIs bought about 3,700 odd crore rupees in trade. So that's as far as the setup is concerned. Let's welcome our guest on board, Mr. Mayuresh Joshi joins in. He's the head of equity research at William O'Neill, India. Warm welcome to you, Mayuresh. Good to have you with us, as is the case always. Well, lots happening. Back home, earnings, and globally, all these statements coming in from Donald Trump after he's been assuming office. So many executive orders signed in. What does his tone and tenor and the statements really mean so far for emerging markets like India? How are you assessing the initial few days?
Morning, Sakshi. Always a pleasure to be on your show. No, two things. One, I think from an earnings perspective, earnings have continued to remain soft. Albeit a strong show by mid-cap IT or the IT sector in general. But generally, I think as you head into the second half of the earnings season, which will largely be dependent on how consumption-driven sectors will report, the expectation is that it's probably going to be a soft quarter, and downgrades expected as far as forward earnings are concerned in terms of annualized numbers. On Donald Trump and the tweets and geopolitics itself, I think that's a large unknown over the next few weeks for the markets itself. Yes, he signed a lot of executive orders. Pertinently among them, I think the Inflation Reduction Act, just as an example, right, where he's altered the funding in terms of solar renewables as well. He's probably pulling out of the Paris climate change as well. So what kind of an impact does that have in terms of the entire industry dynamics itself? Is to be seen. He's obviously put out a few statements yesterday as well in terms of how crude prices should probably behave and how interest rates should dwindle down. But I think it's very, very conflicting, because if you're probably looking at how the core inflation has remained very, very sticky in the global context, anything to spur this inflation higher will probably mean that interest rates might not dwindle lower. So I think a variety of spins coming through. I think it will depend a lot in terms of economic data, actually, very earnestly and honestly. Statements are one thing, but what happens in reality on ground as far as economics are concerned is a totally different ballgame altogether. So I think it's going to be a volatile phase. And obviously, we're heading into the budget over the next few days. The markets will be keenly watching out for any announcements there.
Absolutely. Mayuresh, let's drill down a little deeper to understand the first part that you mentioned, that's earnings. And I wanted to bring up the mid-cap IT names that, sprung the surprise yesterday. Of course, the earnings have been good. The commentary has been good. Order flow is fine. And they're definitely doing yet again better than their larger peers. What is the fresh approach that you would have in the IT pack now, post the large part of the numbers are out?
So Sakshi, again, maintain my stance. Mid-cap IT will outperform large-cap IT, primarily because of most of the facts that we've got on the table, right? Revenue growth has been very, very stable. The order wins have been very, very stable as well. And the outlook that the managements have largely given for the space itself is that pricing does not seem to be a big concern at this juncture. Orders are still coming through. And again, I think yesterday, what probably happened in terms of SoftBank and the Trump administration, a $500 billion commitment in terms of AI, $100 billion have already moved in, is what we are reading through media reports. So I think as this probably gets, there is more influx, if I may put it this way, into the system itself. There are expectations of more order wins expected to come specifically when AI, Gen AI is concerned, where a large part of the mid-cap IT market is probably positioned. So to that extent, I think these stocks might continue outperforming. The argument again is very much in the favor of valuations, where valuations are sky high for these companies again, and that's a word of caution and a risk factor itself. Any execution risk of any sort that probably comes through. The derating might happen equally fast as well. You have to keep a tab in terms of quarterly numbers and management commentary. So far, so good for the mid-cap.
Absolutely. The pre-open rates are indicating to a softer start, 23,078. Again, another 135 points gone right in the initial few minutes of the pre-open trade right there. 119 point of a loss even for the Sensex. So again, we could be heading into a volatile start is what we are looking at. And these prices are shifting very, very fast. So we'll just wait for the final prices to really come in. Let's discuss some of the other pockets, Mayuresh. Dr. Reddy's, that came out with the numbers, the biggest name that we had as of yesterday that we are going to be seeing for markets to react. Now, 2.5% surge in profit at 1,413 crores. Revenue has grown by about 16 odd percent. EBITDA has 9% increased as well, but the margins dropped a bit too. Pharma, of course, we know how it has outperformed in the 2024. Many stocks here have got re-rated as well, not just in the frontline pharma space, but even in the diagnostics and hospital chains as well. How is your own approach now on Dr. Reddy's one, post the earnings, and on the rest of the pharma pack?
Well, largely again, Sakshi, I think a large part of the dependence for a large part of these bigger companies was on Revlimid, and Revlimid will come off by March 26, and therefore creating a specialty pipeline has become very, very critical for these larger players. Obviously, Dr. Reddy's, Sun Pharma, Cipla are all doing stuff that is required in terms of the FTF pipeline and specialized ANDAs as well. Dr. Reddy's in particular, as far as biosimilars are concerned. But I think the market would ideally like to see what kind of launches probably come through in the next few quarters. What kind of an exclusivity do these launches give them, both in terms of revenue exclusivity as well as time exclusivity? And therefore, I think how will margins play out in the interim as well as in the long term as well. So I think pharma is a defensive space, very clearly. I think with what is probably happening in the globe at this juncture, selective pharma names might continue doing well. I would love to see how Sun posts its results, because the specialty pipeline that Sun probably has is a far more structured pipeline in terms of key launches that are expected. And therefore, I think the margin performance can be quite elevated if these launches takes place in the timelines that one expects over the next couple of years. Again, I think EPS ratings, RS ratings, selectively for pharma players look very, very attractive. So Sun is something that we'll keep on our watch list. Within hospitals as a space, actually, I think that is one space where our opinion and our belief is that earnings should remain relatively stable. And therefore, I think if you would have seen stocks like Healthcare Global as an example, Aster DM as an example, with the merger dynamics going through with Quality Care, they'll become the second largest in terms of revenue, third largest in terms of bed size. Dynamics ROC wise should show improvement as a combined entity. EBITDA margin should show improvement as a combined entity. And our POPs should probably show a stable growth going forward with increased traction as more therapeutic additions are probably added on. So yeah, remain optimistic in terms of our sector placement as far as hospitals is concerned. Their EPS rating, RS rating, institution holding as per canceling parameters look very, very strong.
Okay, got that. Let's look at as the market stabilize in the pre-open, some of the rates right there that you can actually look at. Opening HPCL Q3 earnings in line, 3.2% higher is the indication right there. We're also looking at United Spirits about 2% higher, strong Q3 again. That's also looking to open higher. Indus Towers, 0.5% higher. Again, a Q3 results impact that we are looking at, sharp jump in EBITDA and margin. That could be opening higher. Interglobe Aviation, December market share is up 0.8%. So you could see a 0.6% of an uptick that's being indicated right now on this one. Again, Q3 impact will be on Amber Enterprises. This was the stock that I was looking at. Yesterday, again, ahead of earnings, it was up. Today, again, there's an indication of 6% higher. Move on this one again, and we'll look at this space next with Mayuresh. IEX also, again, on the results impact, 2.7% higher. But Nippon Life, despite the jump in some of the key parameters, is looking at a dip, opening with a dip. Sudarshan Chemicals has opened a QIP floor price 1107 rupees. You're looking at a movement on the higher side. But Dr. Reddy's somehow missed the estimates on some accounts, about 4.6% lower is what is getting indicative of at this point in time. Let's look at those IT names that were actually shining bright yesterday. Let's look at some of them. Persistent Coforge to see if there is a second in a row kind of a move. It's not moved yet as far as the prices are concerned. Coforge just about 1% lower. So at least it's fair point to see, expect some prices to, be moderated after that sharp 12% surge yesterday. But let's look at this back as well, Mayuresh, like I was pointing out. The EMS space, erstwhile favorite, it consolidated. Then ahead of the earnings, we've actually seen some of them crack a bit, like Dixon and all. But yesterday there was a lot of buying again coming in.
And what has probably happened, Sakshi, is that the space has become the center of attention for the last few quarters. And for obvious reasons, I think the expectations of the space itself growing 4 times from 20 billion or to 80 billion dollars over the next few years, aided and abetted by whatever we are probably seeing in terms of back-end investments done in PCB circuits, semiconductor chips as an example. And a large part of the skew of the market probably moving towards the ODM part, which is the original design manufacturing part, that these folks can probably venture into more aggressively. It's a very small pie in terms of their overall revenue, and therefore margins are relatively lower for most of the EMS players within this space itself. But as they start venturing into the ODM part and the other aspects that I just spoke about in terms of new ventures, there is huge expectations that earnings might start showing significant amount of improvement going forward as well. But with the price damage that we've seen and the valuations that they traded, 80, 90 times forward numbers, I think it was just not sustainable. I think a small miss in numbers, like you saw in Dixon's case as an example, gets resonated by the entire industry. And therefore, I think the compounded growth rate, which should beat the industry estimates, is going to take time. So I think one must understand that they're building a backward integration facilities because of the PLI schemes announced. They're trying to diversify their supply chain. They're trying to increase the ODM component. And they'll get their fair share in terms of new business opportunities.
Okay, got that. Mayuresh, we'll also welcome Mitesh Panchal on board on the panel now to discuss with us the technicals today. Welcome to you, Mitesh, and good to have you with us this morning. Tell us, how have you assessed the extreme volatile environment in the market of late? What is it that you're guiding on the benchmark indices right now to all the investors? What exactly should be the strategy? Stay away completely?
Good morning, Sakshi. Good morning, Maurice. Good morning to all the viewers. So the best strategy to play right now is to be silent and observe the market. Reason being is this, that we have observed this thing in past, that when the market is going through a high volatility, either on the upside or on the downside, it is generally the first indication of a bottom formation. But today it is too early to say that. But yes, one thing which we can say is that we are in the first stage of a bottom formation, and stock specific and sector specific bottom formations are taking place. So our broad idea is not to look at the indices per se, but we are definitely looking at the stocks and the sectors Now, talking about that, we think that there is a good amount of money to be made going forward in next 1 to 3 months in fertilizer sector. So, Chambal fertilizer is looking extremely good at this point of time after the correction. And one of the stock from the Aditya Birla Group is ABFRL. So over there as well, we are of the view that yes, the opportunities of money making can be there. So I think ABFRL and Chambal Fertilizers, these are the two stocks which we are looking at right now and recommending our clients to accumulate at the current level.
Okay, fair point right there. We'll keep all these stocks in mind too. Okay, Mayurish, also wanted to get a sense on this one interesting space, and that's the telecom space. We saw what happened with Vodafone in the last few days. But a lot of the numbers of the linked companies are coming out. Indus Towers, Tejas Networks. Now these were the erstwhile favorites. Even HFCL has come out with a 2,000 odd crore rupee order, so that's coming back into the news as well. Any fresh strategies on the telecom space at large? What are you doing right now ahead of the budget, or what things could progress like from here?
So for paucity of time, I'll quickly conclude my comments. I think Bharti Airtel probably looks the strongest in terms of our EPS, RS ratings, institution holding. There is expectations of their wireless expected to do well, specifically the enterprise part of the business. And because of the ARPU increases, balance sheet construct in terms of cash flow should be relatively better.
Okay, got that. Let's go across to the prices then on the markets this Friday morning to see how the markets are taking shape as far as the benchmarks are concerned. Let's look at how the Nifty is opening right now. And at this point in time, yes, flattish with a positive start at this point as far as the Nifty is concerned. 23,219. The Nifty Bank at 48,600, 0.02% higher. Again, absolutely flat at this point in time. Let's look at the broader markets. Remember, that's where the second half move really came in pretty strong yesterday. The mid-cap index is flat with a positive bias at 54,131. Remember, yesterday, nearly 2% of move came in on this one. And the small caps as well, they ended with over 1% gains. So that's also something that we'll look at as to how it's opening again on the positive zone. Absolutely flat now with a negative bias right now. Advances are 931 with declines are 515 on the Nifty. And the Nifty Bank is now turning red, slight slipping coming in as far as these stocks are concerned. But let's look at the IT names, flat with a negative bias again after yesterday's strong move that we've been seeing. Some of the top losers are Dr. Reddy's after the earnings, Apollo Hospitals, Tata Motors, Sun Pharma, some pharma losers coming in. Maruti Suzuki, remember yesterday the news flow of price hikes came in, about a 0.7% of a decline on this one. HDFC Bank is declining. Those are the key counters that are actually putting some pressure on the markets as of now. At this point in time, even the banking names, Kotak Mahindra Bank, IndusInd Bank, that's losing. Cyient, 9% down in trade. So that's after the earnings, that's actually declining pretty sharply. We'll come back to our guests on that one, 9.7% lower, 1585 right now. That's the other important number that you're looking at. But BPCL, HPCL is something that we'll look at. 1.5% higher for BPCL, 3% higher for HPCL on the earnings front. Coal India about 0.8% higher. Some of the mid-cap names that are actually buzzing are BSC, Bank of India, Hindustan Zinc kind of numbers. But sectorally, metals, royalty, that's in thick action, oil and gas, consumer durables. You also have PSU banks, private banks, just about flat with a positive bias right there. Stocks like Axis Bank and all are moving in the positive zone. But definitely Dr. Reddy's is now losing ground, 5% lower for this one. Let's get Mitesh right here. Mitesh, your reaction on the market opening?
So it's flat. Let's wait for the first half an hour and then we'll take a call. So around 9:45, probably the picture will be clear. So far, so good.
Okay, what would you do on Dr. Reddy's, Mitesh, today?
See, in pharma sector, we have witnessed this thing in past that whenever you see a ferocious move either on the upside or on the downside, it is advisable to wait. So again, for Dr. Reddy, let us wait for the first hourly candle and see to it where the highs and lows are being placed, and then we will take a call. So as of now, at 5% down, no need to take either side of the trade, either on the buy side or on the sell side. Just wait for it and let's see where the first hour will in which range the stock will spend its first hour.
Okay, got that. We'll get back to our favorite sector. That's the capital markets related sector. Mayuresh, K-Fintech, 11% higher after those earnings have come about yet again. So that's another space that's buzzing completely. How are you looking at KFin and the opportunities, across the sector and the space right now? Are there still any fresh entry points here?
So strong momentum, Sakshi, very frankly, and therefore I think if you probably look at all stocks within this space, right? BSE has done a phenomenal move in markets which were weak. You've seen CDSL, which has performed exceedingly well. You've seen CAMS, which has done well. KFin, FinTech is doing phenomenally well as well as we speak. And therefore, I think this entire domain, not restricted to capital market platforms, but also the asset managers, including the likes of HDFC, AMC as an example, have done well. Now, the entire construct as a tailwind is pretty simple, right? 5.5% is just the asset ownership, which is significantly lower compared to the global average as far as equity ownership is concerned. And therefore, I think within the ecosystem itself, as SIPs improve, show significant improvement, the number of demat accounts show significant improvements. There is more stability in terms of annuity income through transactions that will keep on burgeoning because of the sheer increase in terms of demat holders. And the flexibility to probably trade through online and mobile platforms will give exchange significant turnover volumes and reasonable annuity growth as well. And therefore, I think this entire ecosystem, along with expectations of a large part of the households actually moving up the value chain as far as their annual incomes are concerned, and therefore need of professional asset managers to probably manage their money as well, is going to be a reality as we head into the next few years. So yeah, I think there are plenty of tailwinds for the entire sector. The sector is in momentum, and the EPS ratings because of strong earnings post, as we see the market in India, look extremely, extremely strong.
Okay, got that. Let's look at some of the other pockets. Mitish, I think the mid caps are now improving yet again, just the same way how they moved up yesterday. It's inching to the day's high, 2/10% higher. Strong move coming in. How are you looking at the broader markets right now? Opportunities here?
Absolutely. As I said, selected pockets are looking pretty interesting. Apart from that, what is going to happen next in the market is that there will be a ferocious move with respect to the stocks and the sectors. So, I mean, we are looking at it. One of the sectors which we like right now is again sugar. So, of late, there is strong sell-off in this sector, but I think commodity-related stocks are coming up on the surfaces. Probably sooner than later, the metal sector will also attract the buying momentum. So as of now, Balrampur Chini is looking pretty interesting at this level. We are of the view that with a stop of 5% from here on, one will be able to make around 20 to 25% in the next 1 to 3 months.
Okay, got that. Science now 10% down. Mayuresh, could you help our viewers really understand? We were discussing the mid-cap IT space and the
Yeah.
opportunities there, the expectation of a large outperformance vis-a-vis the large cap peers as well. But how does one really not go wrong when selecting the right stocks within the mid-cap IT band? And what's gone wrong as far as the results for a Cyient are concerned? Is it a quarterly thing? Is it just linked to only one company? How should one really understand that?
Yeah, so I think you'll have to measure it company-wise within the sector itself, Sakshi, because as I said, I think the entire sector has moved up significantly. And if you remember my comments, I think if there is a slight earnings miss because of the elevated valuation in the late stage basis, corrections will be equally sharp and solid as well. That's what we are probably seeing in Cyient at this juncture. But I think the best way to analyze this is through the qualitative aspects. One, in terms of how the AI stack up is within the respective domains that mid-cap IT companies are servicing. Second, whether they are able to maintain their order wins quite significantly. And what is the management outlook in terms of the margin performance itself? The third part, obviously, is in terms of their client pyramid strength as well. Because that becomes also extremely critical from a mid-cap IT perspective. If there is too much of client concentration from the top 5-10% clients as a percentage of your overall revenues. And there is some amount of shift for one of the clients for whatever reason whatsoever. That can have a huge impact as far as earnings is concerned. Therefore, diversification of client pyramids also becomes important. So I think if you have a look at these 3-4 qualitative aspects, I think you'll be relatively better off in the
Got that. Mitish, the PSU stocks, I believe, are coming back in focus again. CPSE index is up over 1% in the morning trade. Anything that you are looking at within the large PSU basket here?
Within the PSU basket, from the risk reward viewpoint, what is looking pretty interesting is the PSU banks. But unfortunately, the trend is not picking up over there. So I think
Hmm.
Canara Bank, PNB, Bank of Baroda is looking extremely good on the charts.
Hmm.
Available at an extreme good risk reward ratio. But the fact of the matter is this, that unfortunately the stocks are not picking up the space. So we are keenly waiting for that. I think one of the biggest money can be made in the first half of the current calendar year will be in the PSU banking space.
Got that. Okay, Mayuresh, would you have your favorites still on? Bank of Maharashtra, Can Bank, many such banks that you have marked out many times on the channel. Would you still go big on them?
We continue holding, as I said, SBI and Bank of
Hmm.
Maharashtra in global portfolios, and fabulous numbers by Bank of Maharashtra again.
Hmm.
Little bit biased because I think if you probably look at the stack up on how these numbers are played out, I think a large part of the banking universe has actually reported decent numbers. So deposit growth has been quite good. The expectations in terms of the cleansing of their balance sheet has happened in true earnest, and therefore, if you probably look at a large part of their PCRs across the mid cap PSU universe. They have shown significant amount of elevation, which probably means that as recoveries start taking place on their books, which the managements are alluding to, you're going to see a significant bump up in terms of bottom line growth. Again, from a construct of valuations, how they are placed from a stage-based calculation, as we see it at markets with India on key pivot levels as well, attractively placed. And therefore, I think selectively this universe becomes something as an investable domain within the broader markets.
Okay. Let's also discuss the other aspect within the PSU pack, and that's the OMCs. Today they are in thick zone. Mayuresh, how would you approach the BPCL, HPCLs of the world? We have discussed this earlier as well, and with this fresh comments coming in from Donald Trump on the oil prices and how they're going to be continuing to do, further production, drill is what he really said. Also, he mentioned that everybody should be working on reducing the oil prices in the OPEC and all the stakeholding communities and nations right there. How would you look at the OMC play and the oil and gas play at large?
No, so Trump is absolutely right. If you probably look at the strategic petroleum reserves that the US has at this juncture, has depleted quite significantly. So they do need to build that up. So I think his comments are coming from that perspective. Obviously, I think in relation to pricing, it's a matter of demand supply. I think one tweet or a statement will not probably make a difference for how oil prices move or how OPEC countries probably are expected to behave because they need to sustain their economies as well. Just some base calculations with the kind of investments that Saudi is doing, right? One of the largest oil producers in the globe. In terms of the accelerated investments in non-oil areas, they need oil prices to sustain above the $75 a mark for them to probably ensure that their deficits remain in control. And therefore, I think oil marketing companies in general will behave on how oil price movement probably happens. A large part of this move also is contingent on the fact on how their inventory losses or gains are probably reported and how refining margins are probably playing out as well in terms of the core demand supply dynamics. Let's not forget that with all this in perspective, the downstream product prices, as far as petchem prices are concerned, are also determined by a lot of these factors at play, including the spreads that probably happen. So yields are excellent in terms of dividend payouts, BPCL, IOC, but there are a lot of moving parts as far as OMCs are concerned. So I think we take them as trading bets, momentum bets when their cycle is well and truly on, but not as investment bets or a thesis that we carry on our books.
Right. Before I go on to Mitesh to ask about the first 15-minute candle, I'll come back to you, Mayuresh, on the cement pack as well. Ultratech came out with the numbers, and the entire space was also in thick zone yesterday. We saw like JK Cement, for instance, rallying sharply yesterday. Most of the stocks are just hovering about 0.5% to 1% higher in trade today. What's your own approach on the cement pack? Again, we are heading into the budget. A lot of infra-related announcements could be that we will be all looking at, and the one thing that actually stands to benefit as an ancillary is clearly the cement story. Post earnings on Ultratech, several brokerage houses are giving over 13,000 kind of targets as well. What's your own sense?
So again, I think at market space we like leadership stocks, and Ultratech is a strong leadership stock, actually, honestly. Again, from a tailwinds perspective, 4 points. One, I think in terms of how the GDP is expected to grow at 7.5%. Cement volumes grow 1.5 times. So you can expect 10 to 12% volume growth for the industry as well. Second, strong consolidation for the industry itself. And therefore, I think as consolidation happens, pricing would largely remain in favor. With input costs remaining stable, the reported EBIT and EBITDA per ton in the ensuing few quarters should be relatively better. Third, in terms of strong additions that are probably happening within the space itself selectively, apart from consolidation in terms of either clinker or grinding additions are happening in the right areas. And a lot of captive waste is probably put into use. By captive waste, I mean captive waste power and internal power source consumption as well, which reduces the logistic and fuel costs to a large extent. And let's not forget the fourth and the most important part from a budget and infrastructure spending perspective, rural and urban housing, ports, roads are going to be the mantra going forward as well, which probably upends a large part of the operating leverage in terms of utilization level of the balance sheet. So again, leadership stocks is something we prefer. Cements sector's EPS rating and institution holding looks extremely strong. Ultratech, JK Cement should be on your list.
Okay, got that. Well, on that note, Mayuresh, we'll thank you for being with us on the show today to share with us all those fascinating insights. And of course, when we meet you next, we'll be very close to the budget and we'll be discussing everything budget, right next. Let's hope things come back in a great way. Of course, no big bang expectations this time around, but at least no negatives is what our top priority is that this time around from the budget. We've already seen how things dwindle post the interim budget. We hope things mend this time around as well. Mayuresh, always a pleasure to have you with us on the show.
Thanks, Sakshi. Always a pleasure to be on the show. Fingers crossed. I think yes, no
Yeah.
negative, if any, from the budget itself. But again, remain very, very optimistic. India is the market to be for the next 10 years.
Wonderful. Okay, thank you so much. Mitesh, first 15 minutes candle out. What looks good to you? How would you really play the market today?
I think reality space is coming back. So DLF is looking interesting at 720 with a stop of 700, but can go for the intraday target of 740, 750. Second is Exide is looking very interesting at 385 with a stop of 380. One can go long for a potential target of 395, 400. So Exide and DLF after the initial opening is looking pretty interesting.
Okay, got that. So that's as far as the first 15 minutes go, and some of the stocks right there that you have at the buy stamp coming on your screens from Mitesh's side. Let's look at what else can we discuss. Mitesh, the other space that I also wanted to discuss with you is this erstwhile favorite stock, IEX. It's come out with the earnings. Q3 consolidated net profit has risen to 107 crores. Revenue increased to 132 crores again. EBITDA also improved. Margins also came in at 85.6%. But there's been so much of an overhang of what will happen on the regulatory factor. We've seen extreme volatility on this counter. What is your own suggestion here?
So if you look at the monthly and the quarterly chart, the stock has spent quality time in consolidation. So probably the breakout is nearby. But again, Shakshi, what we'll have to see to it is that in the last 3 months, if you analyze the delivery-based volume of any high beta stocks, it is decreasing drastically. So majority of the participation is coming from the intraday players or the players who are going to stay with the stock for a very short period of time. So in that case, the trend prediction is becoming difficult. So advisable to avoid right now. Let us see where the bottom formation take place, and then we will take either long or a short position in the stock.
Okay, we'll go back to Scient viewers. It's now 15% lower in trade, 1491 after those earnings have come in. Mitesh, would one be burning their fingers to look at this 15% dip as a buying opportunity, or is it giving you a long-term opportunity to buy into the dip here?
Absolutely not. See, Sakshi, forget about this stock. Any stocks which goes up by 20% or 15% in a day or goes down by 15 or 20% in a day, generally majority of the participation as I come on that particular day will come from the short sellers or from the short buyers only, long buyers only. So advisable not to venture into any kind of buying in such stock or any such opportunities. Shacks in this market, if you do your homework properly, you will
Yeah.
always get better ideas. So better not to jump into the stocks which are about to give us the immediate return, because the most comfortable thing in the stock market will always give you the most uncomfortable outcome. So the most
Yes.
comfortable stocks will give you the most uncomfortable returns. So better to watch out or work out for some boring stocks which you probably think will not work out. Because if you look at the psychology of the investor, out of 10 stocks which he's picking up, if he's betting on five, that five will not give you desirable return. But the other five which you have think that they will not perform or perform okay might have proved as a big winners.
Fair point right there. Very well said. I hope viewers take note of this important suggestion that Mitesh has really given in right there. Why not to go boring in a market which is absolutely volatile? Probably that will give you the edge and save your portfolios from, seeing some sharp cuts in this market right now. Okay, so let's try and identify some of those pockets. Mitesh, how about the FMCG names, for instance? I mean, like, this is one pocket which is a staple, but hasn't really given a lot of returns to investors. There is, I mean, like, look at the HULs of the world, these large cap FMCG makers, they have hardly given any investors the returns in the last few years or so. But do you think the time will come now for them to provide that extra hedge to the portfolios?
Exactly. If you see, Sakshi, generally it is pretended that the FMCG and the pharma will give you a cushion in your portfolio. But that
Hmm.
theory is proven wrong this time. If you look at the chart of Nestle or a Britannia or a Colgate or an HUL or Marico, they have been massively beaten in the last few months or so. So that's what I say. I mean, the most comfortable thing, people might have thought that highly volatile market, so let's have some sort of an allocation to pharma and FMCG, but that didn't work. And one thing which we really need to understand is that I'll come to FMCG point, but let me put this point is that the market dynamics is changing very fast, Sakshi, and that's what we have to, as an investor or a trader or a algorithm trader, we have to understand that every single day the market is changing its direction in a big way. So it is
Yes.
not that now the old theories will come into the picture. The only thing which definitely works even in today's market is that you have to be contrarian. And if you're not contrarian, probably you will not be able to make money. That is what is our observation, Sakshi, of the last 6 months. So as of now, what we are picking up is exactly the sector which you have talked about. That is the FMCG. Because it's a contra bet for us right now. Nobody is looking at the sector and the stocks. And we have seen in past that whenever the up move comes in the boring sector or a boring stock, it is in a one way. So the way by which we have seen Kochi Shipyard and Mazgaon Dock one way or PSC stock one way, we think that sooner than later the time will come for FMCG stocks to thumb the table and they will deliver a strong return. So yes, this is the space where one should pay a lot of attention into.
Okay, got that. So that's the view that's coming in. Let's extrapolate this sector into the linked sectors and to see how there are movements that are coming in. I will extend this to the food delivery, quick commerce space as well. Zomato, Swiggy, and thereabouts, these kind of stocks, which have been again very volatile this entire week. Post, the earnings commentary has come in. We've seen sharp cuts on Zomato. We've seen volatile moves on Swiggy as well. Mitesh, what is your fresh, expectation and your suggestion here? We were liking Zomato when it was around 240, 245 odd levels, hoping to see that yes, 300 will come back. But here the earnings commentary pointed out to increasing competition and front loading of a lot of expenses from the company right there, and therefore we have seen this dip come in. Why is there a fear on Zomato at 205, 210 odd levels, vis-a-vis what we hoped to see on Zomato at 240 to 45?
So, Sakshi, one thing which we'll have to understand is that when the Zomato and the Swiggies of the world have entered into the market, especially through primary market, at that point of time, the money making opportunities in the market was not good. I will also link one more stock, that is Ola. So, at the
Yeah.
time of listing, I mean, if you see, I mean, even after listing of 100%, if you buy it on that particular day of listing, next day you are making 20% gain.
Hmm.
So that was the ferocious move. So I was of the view now, after looking at the chart pattern, is that those moves are preliminarily financed by the short-term people. And now the juice is over. So I mean they have been left. And now probably all these three stocks which we are talking about, Swiggy, Zomato, and Ola, will attract a lower top, lower bottom formation. So going forward, all the short-term delivery-based trades will be squared into the market, and probably we see a lower level. So what is going to be the strategy for this sector? Completely over right now. Wait for the next 3 to 6 months. The dust will settle, the picture will be clear, and it will be more advisable to participate. Even if it goes above 300, no problem. But then in that case, we understand the floor price, we understand the supports. So better to wait for the next 3 to 6 months and then take the call.
Okay, got that, Mitesh. So that's as far as the view on the new age, quick commerce, food delivery, and the newly listed space is concerned. Zomato, Swiggy, and Ola better to stay put. Wait for the next 3 to 6 months. Let the dust settle, and we'll get a clear direction. Even if you get a slightly higher price than here, you will at least be sure as to whether you're entering the right stocks or not. Okay. Let's discuss some of the other pockets. We haven't discussed banks today clearly, Mitesh. What's your own approach? You did say PSU banks within the PSU basket is something that you're looking at, but how about the large private banks? After some of the earnings have come in, Kotak Mahindra Bank was a great surprise right there after a long call. Is your fresh approach changing with some of the select stocks coming on top of your radar right now?
No, see, Saxi, if you remember, before 6 months, we also had a discussion about only two banks from the private sector, that is Kotak and HDFC. So we
Yeah.
continue to believe that Kotak and HDFC will outperform going forward. So we continue to remain positive on these two banks. Apart from that, one bank which we like probably going forward will be the Axis Bank. So let us wait for the structure to get extremely positive and strong. So this is probably the third bank which we might add in next 1 or 2 months. Right now, we are just keep a watch on that. So yes, HDFC and Kotak looks pretty interesting. On the other hand, as we have seen before 6 months, also we have discussed about PSU banks, and since then it is giving us a pain in the portfolio. But we are assuming that sooner than later, all these three majors from PSU pack, that is SBI, Bank of Baroda, and PNB, will deliver a very strong return. So we per se, with an horizon of 3 years, yeah, this is an excellent pocket to be in.
Excellent pocket to be in. Okay, got that. But some of the stocks that I wanted to also discuss with you. This gems and jewelry space I wanted to discuss with you. What's happening here, especially stocks like Kalyan Jewelers. How should investors really look at this one? I mean, just a few days ago, this was a stock that was soaring day after day, and then there were these news flows that impacted the stock prices yet again. What's your own approach here on Kalyan vis-a-vis the other gems and jewelry makers?
Yeah, so before that, let me give you one observation of last 10, 15 years of studying these kind of spaces.
Yes.
Shakshi, whenever any stocks of such sector which are odd in nature, for example, Swiggy, Zomato, for example, jewelry, when they enter in F&O space, basically, after that, you will see a massive downside. So in Kalyan Jewelers also, you will see a downside only after it enters into the FNO space. In Zomato also, the speed breaker has come only when it enters into the FNO space. So generally, this is our observation that when any cash, any odd sector stocks, which has performed pretty well in the cash segment, after that, when it gets introduced into the FNO segment, generally it is just for the sake of distribution only. So over a period of
Okay.
time, you'll see a beautiful distribution. Because see, for an example, if I have to short Kalyan Jewelers in cash segment, I need a delivery. Okay.
Mm.
Case of an FNO, I don't need the delivery. So as an intraday player also, I will short and buy it at a later stage. And that's what exactly has happened during the Lehman Brothers of 2008, where the Lehman stock has been short sold heavily. Right. So if you see the price performance are not picking up the space in case of a Zomato or a Kalyan, the preliminary reason is that they're a part of an FNO. So anybody who doesn't hold can also short. And once these people come together, probably you will see a 10 or a 5 or a 10, 15% downside in a single day. So if stocks are getting removed from the FNO space, yeah, probably the sell-off will restrict and you will see 300 again as far as Zomato is concerned. But as long as our understanding is concerned, whenever such stocks enters into an FNO, completely avoid those stocks on the buy side.
Got that. Well, the markets have slipped from the high point. If you look at the Nifty, about as 80 point of a decline has come in, 23,200 and thereabouts. The Nifty Bank is also down by about 0.4%, 0.5% from the day's high as well. Similarly for Sensex, it's a decline of about 0.3%. So the markets are slipping. 200 points of a cut on the Nifty Bank. That's the one which is actually losing some ground at this point in time. First half an hour candle will be just out. What does that suggest to you now, Mitesh? What should be the strategy after this first half an hour has played out? And again, we have slipped in trade.
Success, especially the last 3 days, if you place your bet second half, probably you will be able to make good amount of money on the buy side.
Yeah.
So the trade goes like this. In the morning, the short trades are making money. After the afternoon, it's the long side which is making the money. So this is the equation right now. So as a trader, you need to be very specific. Apart from that, if you observe internally, then in the first half, only few sectors will pick up. I mean, yesterday also it was all about IT. Today it's all about IT, like L&T, Mindtrend, Tata, Elxsi, HCL Tech, TCS, Persistent, Infosys, all are making high right now. So the trader strategy should and must be very clear. In the morning, whichever highs you see about odd stocks, you just short it. In the second half, probably after 12:30 or 1 p.m., in certain stocks and sectors, the market is picking up space and there is a strong possibilities of making money. So morning, it's a short trade which is giving you money. In the afternoon, it is the long trade which is giving you money. That is the definition of the market right now.
A very interesting observation right there. Thanks a lot for sharing that with our viewers, Mitesh, on that front. And we'll thank you then on that note. It's always a pleasure to have you to get those interesting insights out there for our viewers to understand the market mood and the texture which is going right now. Of course, when we see you next, we'll be discussing budget favorite stocks. And, that will really help all our viewers clearly move after the budget once most of the major triggers are out and get back into the groove as well. Many thanks for being with us, Mitesh, on the morning edition of Market Today. All right, viewers, Friday, and we're looking at a volatile start yet again, but just like how Mitesh said, probably in the second half, you may look at some certain stocks or sectors making the money and the long trades could also come back into focus. Let's see how that shapes up again in trade today. But again, like I say, it's been the Davos week and you've been seeing many, many interesting conversations coming from the World Economic Forum. So throughout the course of the day, apart from our market conversations, you can tune into those to get a feel of how are the world leaders, top voices from political world, economic world, India Inc. right there at the World Economic Forum in Davos in Switzerland are talking about the way ahead for the world economies at large and what can you expect. Stay tuned. Many thanks for tuning in onto the morning edition.
Hello and welcome to Business Today. I'm Siddharth Zarabi and with me now is Eric Kuden, the Chief Technology Officer of Ericsson. Morning, welcome. You brought the snow along with
so
you.
So it seems.
Great Davos weather. Finally, I must say, after 3 days of the